When it comes to retirement, do you want to have the same old plan everyone else has? Of course not. You're unique and have your own goals and dreams. Don't be treated like a number. This is your retirement. So it's time to think differently. And you're in luck because you found the Retire Your Way podcast with Dave Lopez, founder and managing member of ILG Financial. At ILG Financial, you won't find generic run-of-the-mill plans containing the same old cookie-cutter solutions. Dave and the ILG Financial team focus on building one retirement plan at a time using their Think Differently philosophy. And that means your own comprehensive plan with customized solutions built to achieve just one goal, yours. So put on your Think Differently hat and get ready to take back control of your retirement today and for all the tomorrows to come. ILG Financial's Retire Your Way podcast was created just for you, and it's starting right now. Coming to you from the ILG Financial Studios, this is Retire Your Way, the podcast that gives you the straight talk and honest insight you need to help you achieve your financial goals through smart investing and careful planning. My name is Jeff Shade, and as always, I'm just here to ask the questions, but the words of wisdom and solid advice come from Dave Lopez, managing member and owner of ILG Financial. How you doing today, Dave?
I am doing great. This has been a wonderful series, and I'm really looking forward to wrapping it up.
That's right. This is the last part of our 5 Economic Cracks at America's Foundation series, and this is the final one here today. Really excited to talk about this because we really have learned so much the last couple of weeks. So, Dave, this is our next crack, the silent wealth confiscation here. The demise of the dollar. Since 2008, the U.S. dollar has gained 30% in value, and this is because international conflict and economic instability has caused many foreigners to exchange their local currency for the U.S. dollar. The rise in the dollar is a great thing for Americans, but it might not last. Warren Buffett said, "Sell when others are greedy." And that time is right now. Everything you pay for will go up in price, and I'm talking about gasoline, utility bills, food, etc. So, Dave, what is meant by the demise of the dollar?
That's a great question, and what we want to do today is we're going to talk about what it is, what could cause it, and then some just straightforward talk about how realistic it is, because we don't want to overblow a risk that's not there. But let's start with what is the dollar collapse. Well, the dollar collapse is when, in plain English, the value of the U.S. dollar plummets. Now, when you say value, remember that's always relative to something else. So in that scenario, anyone who's holding any dollar-denominated asset, so that would be cash or U.S. treasuries or things like that, you're going to lose purchasing power. And of course, the easiest way to explain that, and we're all comfortable with inflation, Jeff, is, if it costs $5 to buy a hamburger, if the dollar starts to collapse and it's worth less for the hamburger, right? So you still have your $5. It's just now a hamburger costs $10. So basically, you've lost 50% of the value. That's no different than your stocks tumbling 50% because the stuff you use the dollar for now is doubled. So the hamburger didn't go up in value. It's just the value of the dollar went down. So a dollar collapses when the perceived value of that paper, for lack of a better use of the term, the value of the money is worth less. So when that crash occurs, anybody who's holding the dollars, and that includes foreign governments that own U.S. treasuries, foreign exchanges that trade the dollars, but not the least of which is you and me, individuals who hold dollars in savings or treasury notes in savings. They're going to lose value, purchasing power on those dollars. And when that crash occurs, these parties, again, foreign governments and folks holding them, are going to look for other assets, right? They're going to flee, and you hear in the news they talk about fleeing the dollar. They're going to leave the dollar, which means they're going to try to get rid of their dollars and buy other assets that aren't going down. And those are usually called things like hard assets. Hard asset would be something like gold or silver. Sometimes you might consider real estate a hard asset. So if that happened on a wide scale and you have what we call, or the media calls, a dollar collapse, that would make hyperinflation look like a day in the park. You're talking about the dollar very quickly losing most of its value.
So, Dave, what has to happen for the demise of the dollar to come into play here?
Well, a couple things have to have happened. Usually there's two conditions that would have to be in place. First, there must be underlying weakness in the value of the US dollar. And then the second thing is there must be some kind of viable alternative. Because you notice I mentioned there, when people were fleeing the dollar, well, you've got to flee to something. So there's got to be a better alternative, or at least the perception of the better alternative. Otherwise, if there's nowhere to go, the money can stay in the dollar. So the US advantage we have over the rest of the world is that the dollar is considered the world's global currency. The majority of international contracts demand a dollar for payment. So that adds a lot of stability to the US dollar that other currencies, other foreign currencies don't have. And what that means is that it's going to fluctuate less than other currencies.
Dave, tell me more about the underlying weakness that you spoke of there.
Well, sure. First, I'd like to say that as of now, the dollar is not exhibiting any underlying weakness, which is quite amazing considering how much money printing's been going on in the last 15 years. But between January in 2008 and present, we're now in 2020, the dollar has actually strengthened by 30%. It's gone from 89.2 to 115, and that's just comparing it to other currencies. And it's strengthened, get this, it's strengthened by about 10% throughout the pandemic, rising as high as 126 on March 23rd. And again, that's compared to other currencies. So, why is that happening? Well, the reason is despite all of the money printing, and of course, remember, when we say money printing, I'm talking about, what do you call it, quantitative easing, and all of that stuff they talk about is really nothing more than the government creating dollars by printing on them to flood into the economy to try to stabilize our economy in this unique time. But with all the money printing, with the coronavirus and all of that stuff, why is our dollar even getting stronger? Well, the reason is we're still seen as the strongest economy in the world, right? And remember, we talked a little earlier about you're going to flee. You've got to have somewhere to flee to. So investors trust the U.S. government that it's going to back its currency. So if you believe you're going to get your value for your dollar, you're going to hold on to the dollar. So the dollar's strength, Jeff, is based on its use as the world's reserve currency. And that is the key. The one advantage we have, and this is why, if you remember back to '08, when the world was so mad at us when, the Lehman Brothers happened and everything kind of crashed, a lot of people would say, well, why do they even care? Well, they care because, like it or not, the US dollar is used as the world's reserve currency. So what happens to our dollar affects all of them. And that's why they hate the fact that when we're irresponsible, it affects them. That's not necessarily the case for us with other currencies. So the dollar became the reserve currency back in 1971 when Nixon abandoned the gold standard. So as a global currency, the dollar is used for half of all cross-border transactions, and that requires central banks to hold the dollar, the US dollar, in reserves to pay for these transactions. So as a result of that, 61% of these foreign currency reserves are held in US dollars, and that's more than really any other country by far. To close it out, that is why right now we're not seeing an underlying weakness, right? Because it's by the rest of the world, despite what's going on here, we're still seen as the strongest currency in town.
Dave, earlier you talked about viable alternatives to the dollar. What would be an example of a viable alternative?
Right. Well, just as a review, remember what we talked about was if, let's say, people start losing confidence in the U.S. dollar or they're worried about inflation or something. Moving means you've got to move. There's got to be something that's a better option, right? It's like that. Remember old Duck, Duck, Goose we used to pay, or am I dating myself, right? So there's got to be a chair, right, to go to. Otherwise, you might as well just stay in your chair. So what are the viable alternatives? Well, right now, there is no viable currency alternative for everyone to buy, right? The next most popular currency in the world is the euro, but it compromises. Remember I said the U.S. had 61% of foreign currency reserves are in U.S. dollars? Well, currently the euro is the next closest. 21% of foreign currency reside in euros. And China, who wants to be the new currency, and I guess who wouldn't, they've actually wanted the yen to be the currency, but right now I think 2% of foreign currencies are in the yen. Another example would be a lot of people, are very high. You and I talked about Bitcoin. Right. Is Bitcoin going to replace the dollar as the new world currency? I think that is highly, highly unlikely. And the reason is the very reason people who are betting on it like it now, because they're becoming millionaires overnight, right? What you can't have a viable currency that fluctuates that much day to day. You can't have a dollar that one day is enough to buy a hamburger, and in 3 months it's enough to buy a car, and then 3 months later it's not even enough to buy a hamburger, right? So it's much too volatile. Also, it has become the coin of choice for the black market economy, and that makes it very vulnerable for tampering and other unknown forces. So the fact that, there has no central bank to manage it, to try to limit stability, it makes it a great option if you want to be betting against the dollar, right, and taking bets. But the fact that it would be turned into some viable world currency to replace the dollars, it's just highly unlikely.
This is the final part of our series in the 5 Economic Cracks in America's Foundation with Dave Lopez of ILG Financial. And Dave, I want to continue to talk about this, what would have to happen in the economy for the dollar to collapse completely. But before that, I want to remind our listeners that, at a time when the world feels like it's filled with fear and panic, we remain calm. When others are making rash decisions based on emotions, we remain vigilant and committed to sound strategy. At ILG Financial, we're dedicated to helping our clients achieve their retirement goals through any type of challenge. We were here to help our clients through the Great Recession, and we're here now to help you get through this dark time as well. Nothing lasts forever, and we'll recover from this, so it's important not to panic. If you're not confident in your current plan, have concerns about your exposure to market volatility, or you're worried about your retirement income, we're here for you. Let's help bring some answers to your questions by starting with a second opinion review. We'll sit down together and help bring some clarity to the current state of your retirement plan. Find confidence in leadership right here at ILG Financial. You can contact us through the red footer on our website, ilgfinancial.com, and someone will get back to you within 24 hours. And of course, you can always call the office anytime, 540-720-5656. 540-720-5656. Okay, Dave, let's continue our conversation here. Couldn't an economic crack trigger a collapse in America's dollar?
Sure. In fact, if we did have a collapse of the U.S. dollar, it's expected that that would probably be a necessary trigger. We'd something either internationally or some major breakdown politically in the U.S. And economically would have to be some type of a catalyst to cause that. So here's the challenge, and this is a good thing for us, right? Altogether, foreign countries, Jeff, own more than, get this, $6 trillion in U.S. debt. That's like U.S. treasuries. And they're basically IOUs, right? So we owe foreign governments about $6 trillion. And the IOU is backed up by the U.S. dollar, not by gold or not by U.S. real estate, but just by the paper that we print. The two largest countries, interestingly, are Japan, which is okay, they're an ally, but China, right? If they dumped their holdings, Japan and China, they could literally cause an economic panic and an implosion of the U.S. economy just because of the sheer amount of money going on the market to be sold. China alone owes nearly $1 trillion in U.S. treasuries. So when you talk about China wanting to take down the U.S. or take over as the number one economy in the world, a lot of people say, well, why don't they just, stop buying U.S. treasury notes and sell all of them, and they would cause us to go into an economic panic and maybe a death spiral for the dollar. And that's probably true. So why wouldn't they do that? Well, and let me give you an example. Japan does the same. They own $1.2 trillion in treasuries. So the reason is that as our dollar strengthens, the yen, which Japan and China like to use, is they keep the value of that low, which means basically the cost of their goods are very inexpensive to their customers. And who's their biggest customer? The United States of America. So you see, we're in this unique position where we owe China and Japan all this money, trillions of dollars, and they're forced to continue to buy and back up our dollar because we're their biggest customer. So it's this globalization of a one world economy that is really working to the U.S.'s advantage right now. If we go under, China and Japan go under because we're their biggest customer. So China and Japan, will they ever really dump their dollars? The only time that would happen is if we devalued our money so much, we just went so overboard. If they got to the point where they realize, you know what, we're never going to get any of this money, we might as well just cut our losses. And it would have to get pretty bad for that to happen.
So, Dave, at the outset of the show there, I talked about since 2008, the U.S. dollar has gained 30% in value. So the question is, when have we seen a big demise in the dollar, and when is it going to happen again?
Well, you'd have to have a major event, an economic event. If we had some kind of a civil war or civil unrest, that could cause it. A major world war could probably cause it, but it would have to be something very severe. If the world got together as a group and decided to use another currency or a bucket of currencies instead of the US dollar, that would be a major event that could cause the demise of the dollar. That, again, is very unlikely. And the reason it's unlikely, Jeff, is because for that to happen, the rest of the world would have to agree on a new currency. And guess what they can't do? They can't agree, right? Because China wants the yen, Europe wants the euro, Russia wants the ruble. So until they can agree on some common currency, it's not going to happen. And goodness, I can't even get my wife and I to agree on a budget. How are we going to get the worlds to agree, right, on a currency? So that all works in the U.S.'s favor. So I want to tell folks, this is, of course, is all this stuff is my opinion, but I'm not really worried about a collapse of the U.S. dollar. But you can expect repercussions to actions, right? It's cause and effect. It's no different than anything else. And right now we're printing money. And the big question comes up, which is, how come we don't have hyperinflation? Well, because we're printing it at the same level that everyone else is printing it. So the example I give when people come into the office, and this is a little harder to visualize, Jeff, without looking at me, but imagine remember the Titanic when it was going under and sinking, right, and it tipped, so the bow of the ship, the front of the ship, if you're not a seaman, was up in the air almost 90 degrees. Half the ship was underwater. Well, if you think that's the world economy going under from printing money going under, well, half of the world is in big trouble. They're already at the waterline or underwater. That would be things like, Argentina and Brazil, these countries that are already devaluing their dollar. These little third world countries are having a lot of troubles. But the U.S. is literally at the top of the ship, right, at the front of the ship or the bow. So relative to these other countries, we're the safest game in town. Even though it's evident to all that the ship's going under because we're printing money, for now, we are the safest game in town. So as long as that continues, we will be the safe harbor, which will prop the U.S. dollar up. However, sooner or later, we're going to start to see inflation just because there's too many dollars out there, right? You can't print dollars forever without repercussions. Also, it's the best way for the government to get out of debt, right? If you start to have hyperinflation, that's a way for the government, in effect, to write off their debt because as the dollar becomes worth less, they can just print more dollars to pay off their debt. So I would expect that over our lifetime.
So, Dave, here's the big $64,000 question, and I don't mean to put you on the spot about this, but I know you probably got an answer to this one. What can we do to protect ourselves against the possible demise of the dollar?
Well, the first thing I would say is I wouldn't worry too much about the major demise or even hyperinflation of the dollar. But what I would suggest you want to protect yourself against is for the rest of your lifetime, next 20 or 30 years, is the slow and gradual decline in the value of the dollar or the purchasing power of the dollars. Just inflation, maybe 3, 4, 5% or 6, 7% is considered very high inflation. But just year after year after year of that eating away at your dollars. And how do we protect? Well, one, you have to have a well-diversified portfolio. You don't want all of your money sitting in U.S. dollars or cash or treasuries. So we're going to have to diversify, even if you don't like risk, into other things, hard assets, maybe some gold. I'm not a big fan on gold because it doesn't do anything. It just sits there. But you want maybe some other holdings outside the U.S., and countries that you think are solvent. You don't just want to put it anywhere. Real estate could do very well, right? It's a hard asset and it actually produces money, and we've got ways to participate in real estate without owning it, which is a great opportunity for folks. So those are the kind of the key things you want to do. The takeaway is, if this is of interest to you and a concern, please reach out to us. Let's build out a comprehensive plan together. We can take into consideration the concern for inflation and the idea to diversify some of our money that will actually profit from inflation or enable you to hold value or even do better. And we can talk about some of those ideas.
That's right, Dave. And for our listeners who are impressed by what you've talked about today, and of course, this entire series of the 5 economic cracks, and they'd like to talk to you a little bit more about their personal situation, get a first plan or maybe get a second, third opinion, they can do that by calling 540-720-5656. That's 540-720-5656. Or, of course, as always, they can visit the little footer right here on our website. Well, Dave, I think that's going to pretty much wrap it up for our 5 economic crack series. And again, if you're just just joined us here and you're just hearing the last part of this, the previous parts of this series are online right now that you can take a listen to those. And of course, we invite you to continue to listen to us as we have more great podcasts for you right here on this very podcast platform. For Dave Lopez, I'm Jeff Shade. We're out of time for this week. Thank you so much for listening to us. We'll talk to you again next week with another edition of Retire Your Way.
The information provided is for educational purposes only and is not intended as investment advice for any individual or entity. All information contained herein is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. The views presented today are those of Dave Lopez and not necessarily represent the views of AlphaStar Capital Management, LLC. The opinions expressed are subject to change without notice and do not constitute financial, legal, or tax advice. Please consult your financial professional before executing any financial strategy. Investment advisory services offered through AlphaStar Capital Management, LLC, an SEC-registered investment advisor. SEC registration does not constitute an endorsement of the firm by the Commission, nor does it indicate that the advisor has attained a particular level of skill or ability. AlphaStar and ILG Financial, LLC are independent entities.